On Business Incorporated today. Fuel prices to go up by 0.25 cedis per litre from February, and that's happening in Ghana. Traders rush back to Ghana ahead of the reopening of the border. And Liberia gets $10 million as Green Climate Fund. Hello, welcome to the program, the first one for the week. It's Business Incorporated on Channels Television. I'm Imi John Mekwa. Well, we'll start with trading on the continent, the African continent. It kicked off the week with positive sentiments observed at intraday. Nigeria's main index continues Friday's bullish close, up 0.18%. Also, South Africa's benchmark index makes a big statement at intraday. It was up over 1%. Elsewhere, Egypt's index also looking very good, 0.37%, and Nairobi Stock Exchange closed Friday session up over 0.5%. We go to the Middle East now, where sentiments were mixed at intraday. A pip at the Abu Dhabi and Dubai markets saw both indexes trading in a negative territory. The Abu Dhabi index fell 0.67%, while Dubai's index dropped by 0.5%. Still within the region, Saudi Arabia's index added 0.61% at intraday. The Qatar index was also in the green. It was up marginally, 0.33%. Let's go to Europe now. Germany's Statistics Office is set to publish inflation estimate for January, with experts anticipating inflationary pressure to have eased somewhat. A drastic hike in consumer prices over the last weeks have had people in Germany very, very concerned. Well, we have bringing us up to date on what's happening there from Berlin, Chris Kober, joining us now. And Chris, what has been the situation so far in Germany when it comes to inflation?
It has been one that certainly has had people scratching their heads. Overall, German inflation stood at 3.1% for 2021. It is the highest rate since 1993. Add to that the developments in the last couple of months that have been particularly worrying to many. By December 2021, the year-on-year increase in prices stood at 5.3%. And figures released at the start of the year showed that energy prices were over 18% higher than in the previous year. In Germany, housing, water, electricity, gas, and other fuels make up around a third of the consumer price index. So a sharp increase in energy cost will have an impact. So it is not an economic boom that's driving inflation here, but rather a scenario of high energy cost, acute economic problems, and daring monetary policy. Now, to alleviate the strain of rising energy costs on households, the government is looking into scrapping a surcharge on electricity bills used to support renewable power already this year, which is earlier than initially planned. Latest economic figures have been supporting the idea that action is needed. The German economy has had a disappointing fourth quarter. The gross domestic product shrank by 0.7%. Now, the contraction added to lower than expected GDP growth of 2.8% in 2021 as a whole for Europe's biggest economy. The German economy is still lagging behind pre-pandemic levels. GDP in the fourth quarter of 2021 was 1.5% lower than in the same period of 2019, the last quarter before the coronavirus hit Europe. Supply bottlenecks in the country's key manufacturing sector and the continuing impact of coronavirus restrictions are proving to be a severe drag on economic activity here in Germany.
And amid these developments, the European Central Bank is facing a lot of concerns and decisions to make.
Now, the European Central Bank, the ECB, is responsible for the monetary policy in all 19 member states of the euro area. That means one policy for all 19 countries. Now, that in itself has been a task which means pleasing all the individual governments of all the member states is next to impossible, as economic developments in the euro area countries differ. Now, a diverging trend when it comes to inflation has only added to the pressure on the ECB. Countries with a high debt load like France, Italy, Portugal, or Greece also show less rapidly rising inflation figures, meaning it would give them an even greater motivation to oppose tightening monetary policy, which would combat inflation but also make it harder to service debt. Whereas in states like Latvia, Lithuania, Estonia, and to some extent Germany, the public debt is considerably lower, but rising prices have been a much greater issue. Among these countries, the support for a tighter monetary policy is, of course, growing. The general consensus here being that interest rates would be less of a problem than galloping inflation would be. Also, economic indicators do not point towards an easing on the energy front. Neither do they point towards less pressure on supply chains. In fact, with China continuously pursuing its no-COVID strategy, more factory and port closures are likely. Supply of goods is likely to stay limited, with demand in a recovering world is rising. Now, that is likely to stay an issue, and if it does, it will continue to drive up prices. It is yet again a tricky situation for the ECB to be in, particularly as the opinion that high inflation will be a longer-lasting issue has been adopted by some, but not all, of the members of the ECB's Governing Council. So Thursday's meeting is likely to be a similar heated one as the previous one has been. The December meeting minutes revealed deep divisions over the issue of inflation.
Yeah, tricky situation indeed, and of course we'll be looking out for that on Thursday. Well, how have the financial markets started off the week?
Now, the DAX rebounded on Monday after a volatile performance last week that had investors weighing expectations of economic recovery against soaring inflation, rising interest rates, and mixed earnings. But the mood, as I said, much more upbeat in the early trading session in Frankfurt. German stocks able to recover somewhat. The word from the floor, after the losses at the beginning of the year, a growing number of investors are asking themselves whether now would be a good time to get back into the game.
All right, Chris, thank you so much. We still have the whole week, I guess, to follow up all of these stories. Thank you so much. Enjoy the rest of your day. We move over to Asia now, where shares were higher today, the final trading day of January. Markets in mainland China and South Korea closed for the Lunar New Year Eve. The Nikkei 225 in Japan rose 1.07% to close at 27,001.98, while the Topix index climbed over 1% to almost 2,000. Despite its Monday gains, the Nikkei 225 dropped about 6% for the month of January. In Hong Kong, the Hang Seng index jumped over 1% on the day to 23,802.26, while Singapore's Straits Times index advanced 0.1% to finish the trading day at 3,249.59. Markets in Hong Kong and Singapore closed early today ahead of the holiday. Over India, both the Nifty 50 and BSE Sensex surged by 1.4% each. And the S&P AX 200 in Australia lagged the broader region, closing 0.24% lower. MCSI's Broadex index of Asia-Pacific shares outside Japan gained. It gained 0.6%. In the United States, stock futures were mixed in early trading today as investors braced for the final trading day in what could be the worst month for the S&P 500 since March 2020. Dow futures dipped 0.28%, S&P 500 futures down marginally flat, and Nasdaq 100 futures advanced 0.45%. The moves came ahead of a big week for economic data and some important earnings reports from some of the market's biggest tech names. The 500 stock average is nearing correction territory, down more than 8% from its intra-high earlier this month. The S&P 500 is down 7% in the month of January. Dow Jones Industrial Average is also heading for its worst January since March 2020. The Dow is off by 4.4% this month. Nasdaq Composite, which is roughly 15% off its November record close, is headed for its worst month since October 2008 and the worst first month of the year of all time. The technology focus average is down 12% in the month of January. We go to the oil space now, where prices rose more than 1% today to near 7-year highs hit in the previous session, while supply concerns and political tensions in Eastern Europe and the Middle East put prices on track for their biggest monthly gain in almost 1 year. Brent crude rose by $1.07 to $91.10 a barrel, after adding 69 cents on Friday. The most active Brent contracts for April delivery was trading at $89.51, and that was up 1.1%. U.S. West Texas Intermediate crude added over $1 to $87.89 a barrel, having gained 21 cents on Friday. The benchmarks recorded their highest level since October 2014 on Friday at $91.70, and their sixth straight weekly gain. Meanwhile, more than 1,400 U.S. flights were cancelled on Sunday after the U.S. northeast states were walloped a day earlier by a deadly winter storm that prompted several states to declare emergency. In the metals market now, prices fell for a fourth consecutive session today and were set for their biggest monthly drop since last September, as the U.S. dollar strengthened ahead of key central bank meetings, making bullion more expensive for holders of other currencies. Spot gold was down 0.2% at $1,788.41 per ounce, hovering near the previous sessions of about $1,779. That's its lowest since the 16th of December. Japan's factory output shrank for the first time in 3 months in December, as a decline in machinery outweighed a small rise in car production, casting a cloud over the strength of economic recovery. Traders are on the lookout for policy decisions from Australia, UK, and European Central Bank meetings expected this week. Spot silver shed 0.3% to $22.36 an ounce, while platinum was up 0.1% to $1,008.27. But palladium fell 0.5% to $2,364.49. But the auto catalyst metal was set for its best monthly gain since February 2008. It was up 25%. Let's come to Africa now. In Ghana, fuel prices are expected to go up by 25 pesos per litre from the 1st of February. That's from tomorrow, if the suspended price stabilization and recovery levies is reintroduced. This as a result of 8.52% increase in the price of Brent crude and a marginal depreciation of the cedi to the US dollar during the last 2 weeks. The pending increases come on the back of an 8.52% increase in the price of Brent, a 5.5% in the price of LPG, 6.23% in the price of gasoline, and 9.86% jump in gasoline price, all on the international and fuel markets. Over the next 2 weeks, the Institute for Energy Security foresees the prices of liquefied petroleum gas, diesel, and petrol recording yet another jump at the pump, despite the suspension of the price stabilization and recovery levy. We go to Rwanda now, where traders rush back to Gatuna as Rwanda prepares to reopen border from today. Rwandans will be allowed to cross to Katuna border with Uganda for the first time in 3 years, after the two countries moved to end an impasse at the center of its February 2019 closure, a day after the announcement of the reopening, which business operators, including clearing agents, custom, immigration staff, and logistics sector players, have rushed back to the border area to book space and prepare for the resumption of operations. The businesses, like workers in services and activities that depend on border traffic, such as money changers, vendors, taxi operators, and others, closed shop, and traders left soon after the border was closed in February 2019. Kigali, which accused Kampala of mistreating Rwanda and supporting groups working against Rwanda, recently announced that the border reopening follows meetings between officials and a commitment to address contentious issues. Still in Rwanda, Total Energies and Rwanda Development Board, a Rwandan public institution responsible for accelerating Rwanda's economic development, have signed a memorandum of understanding to develop collaboration on projects related to energies. The scope of the agreement covers in particular energy products distribution, the supply of LPG as a substitute for burning biomass, renewable hydroelectricity generation, among others. The collaboration with Total Energies in the energy sector, particularly investment, is expected to make opportunities available for clean energy storage, distribution, partnership with the private sector in Rwanda and beyond. Additionally, the skills transfer in critical areas such as renewable energies and energy transition will undoubtedly contribute to the development of local expertise in the energy sector in Rwanda. We have more stories from the African continent, but that will be after the break. Stay with us. It's Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television now. The eNaira, the digital currency issued by the Central Bank of Nigeria, has had 694,000 downloads in the 95 days since it was launched. eNaira also recorded less than 10% in peer-to-peer transactions, while the person-to-bank and bank-to-person constitute 90% eNaira transactions. Well, these figures, what do they mean? Do they mean deepening of financial inclusion, or are they just mere downloads? We have Senator in here. He's a fintech lawyer now to share his thoughts on this. Hello, Senator. Good afternoon.
Hello, good afternoon. Great to be here.
Good to have you. So 694,000 downloads. What is this? Are they just downloads? Are they effective? Or they're just people trying to see if they can actually download the eNaira to their phones?
All right, interesting data, interesting figures. And let's have in mind that we've had those figures within the last 100 days, right? And so is that good enough from the central bank, considering that this is a national currency? Let's look at the details of all that 700,000 or so downloads. So far, from the financial inclusion angle, it looks like these are just figures, because as far as financial inclusion is concerned, it looks to me like all of these figures are basically by those who are already financially included. Now that's quite ironical. Now, amongst the 700,000 downloads, we've had up to say about 136,000 of them being iPhone users. Now, if you use an iPhone, of course, it should be assumed that you're already banked. Now, the other 560,000 or so are Android users. Now, if you use Android in Nigeria, it means that you're a smartphone user. It could be assumed that you should already have access to banking facilities through the traditional Naira and not the eNaira. Now, it's pretty also interesting that if you look at those figures closely, about just a little over 30% was provided by a particular bank. Now, that means that people who already exist in a particular bank as customers were those who accessed or downloaded the eNaira, all right? Now, that's on the retail side. If you look at the merchant side, we have just about 22% or so. And then if you look at this whole thing, I think that we are not hitting the nail yet on the head. Why? Because this was about financial inclusion. When you speak of financial inclusion, we talk about access by individuals and businesses to financial banking services, such as loans, such as savings, equity, insurance. We are yet to see that. Now, if we talk about financial inclusion, we should be focusing on those who are not already banked. If we were relying on figures from those who are already in the banking system, I do not think that it helps us to realize the goal of financial inclusion through the eNaira, if you ask me.
Yeah, well, I guess the fact that the report also shows that person to bank and bank to person constitutes 90%. That's the bulk of the downloads, I mean, and the transaction. That shows that it's already those who have already been captured, that are actually, and then the peer-to-peer is just 10%. So what can we say we are missing? What are we not doing to, get fresh hands and fresh minds into the space? What are we missing out?
All right. So we should be targeting those who are not having any access to the banking or financial services, right? Now, how do we do that? We need to look at those in the rural areas, those who don't have smartphones, those who don't have bank accounts. And these are guys that usually typically use just a phone without they don't use a smartphone, but perhaps some of them use USSD. Now, the central bank in its paper on the eNaira has said that they are coming with the eNaira USSD facility. That hasn't dropped yet. When that drops, we expect that we should see more people being covered as far as eNaira and financial inclusion is concerned. But again, if we consider that we already have banks and other financial institutions who use USSD code, who provide USSD code to enable people who don't have smartphones and all or internet to access some basic banking and financial services, it then again raises the bar further that the eNaira may not be able to achieve its goal by just enabling USSD code facility alone. We need to now, if you ask me, this is my suggestion. I think that we need to really focus on the relative ability of the blockchain to enable transactions without any initial KYC and all of that. Now, how do I mean? I think that a lot more people can be captured if we are able to enable, able to just two things. One, we need to rely on the relative ability of the blockchain to enable peer-to-peer transactions. Two, I think that we got some things wrong from the beginning, and I'll take us back, right, a little bit. Now, when it comes to policy making, when it comes to innovations like this, especially when you talk about the currency, which is a very sensitive issue, it has to do a lot with trust. The trust that people place in the system, in the process, matters a lot. I think that while the CBN has said that they've started researching CBDC, central bank digital currencies, as far back as 2017, I think that the central bank may have lost the opportunity of having early and wide engagements with all stakeholders, including the ordinary Nigerian on the streets, who should already have known about the eNaira before it was even introduced.
Before it was launched. All right, Senator.
So that's what I think we are missing.
Okay.
Yes.
All right, so we have to take it there because we have some other stories just before we go. Thank you so much, Senator, however, for sharing your thoughts with us. And we do hope that it's not too late, to broaden that conversation and get more people into the bracket that we're actually looking for. Thank you so much. Enjoy the rest of your day.
Thank you.
Moving on now, the African Development Bank has approved $10 million grant for the Green Climate Fund, for which the bank is the accredited agency to improve Liberia's early warning weather systems. The project will also receive $431,969 from the bank's Clean Dev Africa Special Fund and $1 million from the government of Liberia. The funding will strengthen the country's capacity to produce tailored sector-specific climate information services for the benefit of the most vulnerable. Weather disasters cost the country around $6.17 million each year, a figure that is expected to almost double in the next decade and triple by 2040 under the baseline scenario. We move to Ethiopia now, where the country's bonds have been declared the best performing sovereign debt in emerging markets after a rally sparked by the government's decision to end a state of emergency as a 15-month conflict with rebels eases. The bonds have rallied 6 cents on the dollar since the 26th of January, when the Prime Minister said that the security threat had diminished. That brings returns to this year to 13%, the best performance out of 80 developing nations tracked. Last year, the securities lost 28%, the worst performance after El Salvador. Ethiopia's government declared a nationwide state of emergency in November after clashes between the federal army and the dissident Tigray People's Liberation Front escalated. The drawn-out fighting had hammered investors' confidence in what was once one of the world's fastest-growing economies and sparked a sell-off in the nation's bond. And we go to South Africa now, where retail and wholesale group Massmart saw a 1.9% decrease in total group sales for the 52 weeks ended December 26, 2021, to 84.9 billion rand. The decrease has been attributed to COVID-19-induced restrictions on liquor, trading, and lost sales from the stores damaged during the July unrest, with 43 stores damaged. It cost the group 2.5 billion rand. Despite sustaining these financial blows, the group says there's a silver lining, as in now more than 2-year turnaround strategy is beginning to take shape, with the group managing director to reach 1.3 billion rand of its 1.9 billion rand cost-saving target in the 39 weeks to end September. Well, that's it on the program today, the first one for the week. 4 more to go. Thank you so much for joining us. See you again tomorrow. I'm Amy John McPartland.